Hey guys, Pingu Charts here, and welcome to our episode 2 of our mentorship program. In today's episode, we are going to be talking about indicators and how to effectively use them. Now, starting off in terms of our trading view, this is the tool that we use to actually analyze the charts. And on trading view, what you want to do is the first step to go ahead and plot your indicators is you see at the bottom, you'll notice a symbol called FX. Go ahead and click that and it opens up a menu called indicators, metrics, and strategies. Go ahead and search relative strength index and it will pop up a RSI tool, or of course at the bottom you will notice that it has a little chart drawn out. Now this is very important. A lot of times people ask me, what are the settings for this tool? Now this tool specifically, I actually have it default. You can see the settings. The only thing I really do is change the color options, but otherwise I do not go and change any other setting in this tool. Now, to explain RSI and what exactly is it and how to use it. So now RSI, of course, is relative strength index, which shows you whether a stock or crypto is overbought or oversold. And I'll give you guys an example of this right now. You can see on our trading pair Litecoin, we had a period where there was a lot of buy pressure in the market. You saw that we had a huge candle right around this zone, which caused RSI to break above its medium term zone. So this is what we call the medium term zone. So basically it ranges in between this level. But for a period of time, RSI actually broke above that zone, which usually indicates that that pair or stock is in extreme overbought conditions, which of course means the fact that you are looking for some sort of pullback. You can see that as soon as it hit that level of extreme overbought conditions, we started to see some red candles being formed, and then we pretty much headed right back into our major range. Now, what happened here was you can notice that on the opposite side, when we broke below these support levels and we were extremely in that zone of that continuation, we did see RSI actually head into oversold conditions. So of course, it broke below the range, and that usually indicates that the market is oversold and there are going to be buyers that are going to be present at a specific level. And you can see that the market did see a nice bounce opportunity, and then we continued right back into the range, which we currently have to pay attention to. So now that you understand not only the basics, but as well as the range, what we need to understand now is the fact that RSI is simply just an indicator. It is not a reason solely to enter a trade. And what I mean by that is, for example, let's say the market was in extreme overbought conditions. That does not give you a reason to specifically look for shorting opportunities. Now, going back to episode 1 of support and resistance, I'm going to show you exactly how you can use support and RSI to get the best possible entry in your trading. Now, looking at Litecoin, our trading pair, you know the fact that our first daily support level was $67.52. You can see that the market saw a huge breakdown formation. It hit that support level, and of course, if you look at RSI, you notice the fact that this was also in extreme oversold conditions. Not only do you have RSI in extreme oversold conditions, but as well as the fact that you also have a major daily support level. Now, seeing it from this perspective in your head, you would understand the fact that, hey, not only are we on a daily support, RSI is also oversold. This would be a good area to start looking for some buying opportunities, or of course, looking for some long opportunities. And you can see that the market actually did see a very nice bounce opportunity, because the fact not only was it that daily support, RSI was also in extreme oversold conditions. We saw a very nice move set towards the upside. Now, just like I gave you guys an example of the support level and RSI being oversold, I'm going to give you guys an example of overbought as well as resistance. Now, going from our previous episode, you guys already know that the $76.91 range was a major daily resistance. You can see that basically when we ended up hitting that level of resistance, you notice that RSI was also in extreme overbought conditions. This would indicate the fact that not only are we on a major daily resistance, as well as RSI is overbought, this is usually a period of a shorting opportunity or a selling opportunity, because you know that this is extremely in a crucial zone and there's going to be some profit taking. And you can see that, of course, that once that level was hit, we did see a very nice corrective move. Now, that should give you guys a basic understanding of how to use support and resistance as well as RSI to the best of your abilities. What the best thing to do now, of course, is to go into your charts and find these sort of support level and resistance levels and see how RSI reacted. Now, once again, RSI is simply just an indicator. We have to understand that we cannot just use it solely on its own. We have to have a reason where support and resistance comes into play. Now, the second indicator we're going to be talking about are the exponential moving averages. So what you do, of course, is go on your FX little symbol down here and go ahead and type in exponential moving average. So you can see when I go ahead and type it in, it says moving average exponential. That is the one you are going to use. And once you go ahead and put it on your chart, you will see a line like this. Now, this is very crucial. So what I usually do, of course, is we can start off with our exponential moving average settings. Now, for inputs, I would go ahead and put for length at 20 and leave everything else default. The main thing that you want to do is put the length at 20, and for the style or visibility, rather on style, what I usually do is I make the line a little bit thicker. And the reason why I change the line a little bit thicker is because the defaulted line is extremely minimal and you need to see where exactly that exponential moving average is on the chart. Once you have that drawn out, you are going to head and do the same thing once again. So go back on your FX tool, type in moving average exponential, and it's going to pop up a secondary line. And the same thing, if you look at my settings on the secondary line, the exponential moving average instead of 20 now is going to be placed at 9. Anything else in terms of style, like I said, I use the color yellow and I keep it extremely bold so I can see where exactly my lines are. So now that you have your exponential moving averages drawn onto your chart, what you have to understand, just like RSI, that it is simply just an indicator. You cannot use exponential moving averages by themselves to go ahead and enter a position. And as I showed you with RSI and support and resistance, now I'm going to be showing you with exponential moving averages, RSI, as well as support and resistance to get the best possible entry. Now, for example, what I trade usually is the 4-hour time frame. And if you pay attention to this area right here, you will notice one of three things. Number one, of course, RSI was in extreme oversold conditions. Number two, from episode 1, our resistance was now being used as support. Number 3, we actually broke above our exponential moving averages. That in itself is 3 reasons why you should be looking for a buying opportunity on Litecoin. And you can see, of course, what happened after that. The market actually ended up continuing breaking above, using the exponential moving averages as support as it laddered towards the upside. Now, what you want to be careful, of course, is counter trading indicators. And what I mean by that is do not overthink the reason why, of course, if the market continues to use these levels as support, you don't necessarily want to counter trade and hope for the fact that the market actually breaks below. And what you want to do, of course, is as long as you hold above these exponential moving averages, you only want to be looking for buying opportunities. Now, this is very important. What happens if the market, of course, breaks below the exponential moving averages, and what then? So if you can see that, of course, that we were continuing to use them as support, you were riding the wave towards the upside, and then all of a sudden we started to hit a wall, or of course a resistance level. You can see that on the 4-hour time frame there was quite a bit of resistance at this zone. You can see that there was a lot of selling pressure at this zone. What I would do, of course, is go ahead and draw my support or my resistance line right there. Now, look what happened once we ended up breaking below our exponential moving averages. And once again, this is a perfect example of how you can use these tools. Is we were using it as support, we were looking for buying opportunities, then we ended up hitting a major resistance. Number 1 red flag. Number 2 red flag, we were in extreme overbought conditions. Number 3 red flag, we broke and closed below our exponential moving averages. Now that is very key. We actually have to close below the yellow and white line to be looking for or starting to look for some shorting opportunities. And the reason why I say a close below low is because of the fact that you don't necessarily want to counter trade once again. You can see that we had an example of this happen right here. We actually were using this level as support. We came down, and a lot of traders probably thought that this was going to be the break of the exponential moving average. Instead, the market actually ended up closing back above those EMA lines and continued pushing higher. But now, if you notice that we actually got a close below, and then we started to use the exponential moving averages as resistance. So you can see that we were using them as support over here. Now they flipped onto resistance, which caused a massive breakdown formation. And guess what? We were using them as resistance. So instead of looking for buying opportunities, now we are looking for shorting opportunities. Why? Because of course, on the 4-hour time frame, if we are above the exponential moving averages, we are buying, and if we are below the exponential moving averages, we are shorting. But again, keep in mind, we have to be using our RSI tool as well as our resistance for those confluence of entry. Now, I get this question quite a bit. What happens when the exponential moving averages, or the market rather, becomes stable? So as in a consolidation zone, nothing really is happening. And what we do? What I do personally is when a market starts to range like this, so you can see Litecoin, there was not really any sort of huge moves. We were just kind of consolidating within a range. This is what I like to call a no trade zone. And the reason why I like to call it a no trade zone is because of the fact you can see that the market was extremely choppy. It was very indecisive of which way it wanted to head. And that is why I usually suggest we are not looking for guessing opportunities. You are much better just waiting and being patient before looking for another entry. Now, on the 4-hour time frame, you guys understand how to use this effectively. I want to quickly talk about the daily time frame. Just like on the RSI level, of course, on the 4-hour as well as on the daily, you can see that even on those lower time frames or higher time frames, this goes now, the exponential moving average tool can be used both ways. You can use it on the 4-hour time frame, which I like to use it personally, or of course you can use it on the daily time frame. But if you notice, on both time frames, it does not matter which way you see it. If the exponential moving averages are being used as support, you are looking for buying opportunities. If the exponential moving averages now close below that level and start using it as resistance, you are looking for some shorting opportunities. Now, the larger the time frame with the exponential moving averages, the higher the weight. And what I mean by that is, of course, those time frames are more important. So the larger they are, the more weight there is to them. And just like that, you can see on Litecoin on the daily time frame, when we had the same break formation with RSI heading into extreme oversold conditions, now using it as support, you can see that Litecoin saw a explosive move towards the upside. And once again, the same way, we ended up hitting a crucial resistance. RSI was oversold. We broke below the exponential moving averages. That was your shorting opportunity. And that pretty much in a gist is how to use your indicators to the best of your abilities for RSI as well as exponential moving averages. There's absolutely no reason to be going and drawing 40 different indicators on the chart. You do not need a UFO indicator to be telling you where exactly the levels are going to be. Just understand simple is better, and I will see you guys on episode 3. Thank you so much for watching, and I hope you do enjoy and like the video.